In this video, I want to go over my exact chart setups for day trading options in the US stock market. I want to go over the higher time frames down to the lower time frames and how I execute, and basically go over candlesticks, volumes, and indicators that I use on a daily basis when I'm day trading in the first hour to 1.5 hours of the market open. So this is set up here right now just to showcase the specific time frame. In other videos, I've showcased what my execution layout is, what my secondary screen is, and so I'll link the pop-ups in this video as well to those other videos. But in this video, let's start off with the daily. So on the daily chart, I'm mainly interested in using this when I'm doing my pre-market prep. This is how I prepare for developing a daily bias, whether it's Tesla or whether it's QQQ or SPY. I want to use the daily chart. It's my favorite time frame because it gives me an idea where I expect to see the stock to move, and it helps me develop a bias that's in line with the trend of the stock and the price action that I see. So on this chart here for Tesla, what I'm mainly looking for is trend analysis. I'm looking for how candlesticks are behaving, if it's starting to consolidate, if there are clear levels that I can identify. For example, some clear levels on Tesla here include the following. And I have these color coordinated so they give me some sort of action event, something I should be doing at these levels if I have the opportunity to trade it and I'm not in a trade already. So I have it numbered based on critical levels. Whole numbers are really, really helpful when it comes to trading stocks. So I have the 370 level here where I'm looking to go long, highlighted in green. And these are potential targets in blue and purple, 380 and 395. If the stock ends up going below around 315, I'm looking for short plays. So the daily chart here, I mark my levels, support, resistance levels, critical levels that I see, identifying, okay, there's some consolidation, we're on an uptrend, etc. Besides the lines here to show support and resistance in areas where I'm looking to enter and exit, I'm basically using a few different things. The candlesticks that you see, green and red, I'm using moving averages. The short-term moving average here in the blue color is the 20 moving average, and the 200 moving average here is purple. I use only two and only on the daily, perhaps also the weekly, because it becomes a little bit too much, clutter. The charts become a little messy, especially when I'm putting in different levels and different colors for lines. I want to keep it really, really clean, and combining this with the levels here that I've set for support and resistance or breakout levels, it just provides me a good bias on how I'm looking to execute. And the daily chart is what I use to create the bias, and then I would find a shorter term or lower time frame entry or exit or a pattern. In addition, I'm just using volume here. The volume helps me identify how the price action is doing. So price is telling you where price is and the critical levels that price could break out from, but volume is telling me how price is getting there. If it's starting to see an increase in volume, if we're seeing some steady volume during a consolidation period, ending volume here closer to this area where it's sold off heavily after gapping down below the 20 moving average. In addition to that, on the daily chart, I think it's really, really helpful. And in the last year, I've been including ATR. ATR is something that I use often while I'm trading, before I'm prepping. If I see a move and I look at the ATR and say, hey, look, the average trading range for Tesla here is around $10 to $15. Here it says recently it's around $14 to $15. If I'm seeing the price action show sort of an expansion green candle, it's approaching a critical level, and it hasn't reached its ATR, I find that it's more probable that it will continue higher or move further in the direction, completing its average trading range. And so I use this every single day while I'm looking at trade ideas before market open and after market open. So as you can see here on this chart of Tesla, we had clear consolidation, pressure building up, but at the same time, there were some sell-offs. We found some support, and then we found further support here above the 200 moving average, 20 moving average, and the price action was indicating the buying pressure is increasing. So when you saw this bullish candle here close above, break these pivots, and arrive at this critical level that I had at 370, this is a good indication that average trading range of about $14 will be met in the new day, and that's where you can take a long entry, find a pullback within this, look at areas where it's setting up a support. Unfortunately, with Tesla here, with these last 2 days, it was pretty strong price action, so the stock moved very, very quickly. So if you could find an entry, it might have been on the 1 minute instead of a 2 minute or 5 minute. Having said that, this is how I set up my daily chart. I also use the weekly chart in a similar manner because I want to know what the overall trend is, not just from a daily perspective, but like the long-term perspective. And if I can see support from the weekly, again, having these levels clearly identified, using the ATR as well on a weekly basis, then I'm able to take a trade and go in the direction that the stock is likely to move and increase my chances of having a successful trade. So after the daily, I'm using the 4 hour and the 1 hour. In this video, I'll go over the 1 hour because it's just more reactive right up the open, because I trade in the first hour of market open, hour to 1.5 hours. The first candle is the first candle that opens at market open. And if I see consolidation or possibility for a breakout, I have increased my chances of succeeding in that trade if I take a short-term entry or a smaller time frame entry, and it starts to become a bullish candle, breaking critical levels here. On the hourly though, I don't show the 200 moving average, so I just stick to the 20 moving average, the trend lines if I have alerts here. And the ATR is something also that I typically don't have on the 1 hour candle. So this is typically designated for the daily and the weekly. On the 1 hour, it's on my left screen here where I look at it as a reference. It's in front of me while I'm executing as well. The 1 hour is really, really helpful. And I would say it's probably the second best time frame after the daily, especially if you're day trading in the US stock market. I also use the 15-minute. The 15 minutes really great because every 15 minutes, you get an idea for how the trend of a stock is going to be. You're looking at opportunities either at market open, you're looking at opportunities after the 15 minutes of market open, or it could be at half an hour mark. The 15 is really good because it refines the opportunity that, hey, look, you're not going to get caught in a pullback, or if it's extended, it's more likely to pull back. It's hit a resistance level. So the 15 minutes is really great. And I use this in combination with the hourly to sort of see, hey, I found a pattern here on the 1 minute or 2 minute. It's a breakout, but the 15-minute looks like it's a little extended. I'm probably not going to take this trade, and perhaps I might go on the other side of the trade and sort of scalp by taking a reversal right at the resistance level right here. So a lot of traders do that, and I find that it helps me as well. Make sure that when I'm entering on a shorter time frame, I have the higher time frame in my favor, but the 15 is kind of like in between that. So it gives me an idea that, hey, look, I'm going to be in this trade probably 1 minute to 10 minutes. I don't really want to be there too long. Is the 15 minutes supporting my thesis here? And again, it's just the 20 moving average, trend lines, any alerts, and the volume. I try to keep my chart really simple. And this is something I do recommend because you don't need all these indicators. You don't need all the trend lines and different levels. I used to also mark the pre-market highs and pre-market lows, but these critical levels at whole numbers, I find that are actually more effective. And this is where buying behavior and selling behavior is more likely to occur. Again, you see this here. Pre-market's holding, but you can actually get an entry here at 370. And if it breaks 380, you just know it's going to continue because the buying pressure is clearly there. But after hitting about $15 to $20 on the day, you're more likely to get a pullback. And this is where the 15-minute and the daily levels that I've set up and the areas where I would go long, areas where I would take profits and maybe a secondary profit here, just to know that on the daily, I'm getting support. I'm still in the right trade and it still has more potential. I just got to wait for a pullback and be patient. So the 15 minutes is really helpful for that medium ground. On the 5 minute here, it's sort of the same thing. The 5 minute is good because now we can get a little bit more granular. I consider the 5 minute kind of like my supportive time frame. If the pattern that I'm looking for is typically on a 2 minute chart, some traders use the 1 minute chart, but I find the 2 minutes a lot cleaner. I want to make sure that actually the 5 minute is supporting me. It's actually in alignment. And one quick way that I look at it is if it's trending above the 20 moving average and the 2 minutes showing like a breakout pattern or a buy setup pattern or an opening range break towards the upside, if the 5 minute is trending above the 20 moving average, I'm on the right side of the trade. At least that's the current thesis that, hey, look, it's going to go long. I found a pullback area. It's holding the 5 minute 20 moving average. I'm more than likely to succeed in this trade. And if it still doesn't work, I have a stop loss. But the 5 minute here is kind of like, needs to be supporting my entry time frame. And if I don't have the support from the 5 minute, I'm likely getting in a little too early. So that's how I use the 5 minute. Again, with the volume, the different trend lines from the daily. I actually try my best not to mark further trend lines or levels or horizontal lines on the chart because, again, I prefer just trading clean charts I prefer to have enough ability to discern what the candlesticks are doing instead of like the specific levels. And yes, pre-market high, pre-market low, or the prior day highs and the prior day lows and the ranges that you would see on a typical day, those are good to have. So if I end up doing it, I might just, make it a really dark color just so I don't even have to worry about seeing it on the chart, but at least I can see the level. If I hover over it, I can still see the pricing. But that's basically it. I try to keep my charts really, really clean and use the daily levels that I've set up in advance of market open to determine where to take a trade. And the last time frame that I use here is the 2-minute. The 2-minute is the time frame that I'm looking for patterns. It's the time frame that I'm looking for entries and exits. It's the time frame that I'm looking for, taking a trade. If I see it on the 5-minute, I might take it. Like if it's like a flag breakout, I might take it on the 5-minute. But what I found in my experience is if I'm setting a stop loss based on my premiums, if I set a stop loss on a chart, typically the 5-minute might increase my likelihood of getting stopped out because it just needs to pull back a little bit more. So the 5-minute is more supportive, and the 2-minute is where I look for my trades, look for entries and exit signals if it's breaking a critical level. And if you see something like this, which has recently happened on Tesla, I mean, this is generally speaking, the reason it happened is, in my opinion, is because of the daily. The daily is showing a breakout. Breakouts are momentum plays. They're, candle expansion plays. They are likely to showcase this type of price action, but this is not normal. If I have a 2-minute chart and I'm in a trade and it's up 2 to 3 bars, if it's up 4 bars, 5 bars, that's where I'm typically looking to take profits or at least scale out. That's when the premiums, if you're trading options, are usually up about anywhere between 30 to 50 cents. So it's a good idea to just take some profits and lock it in. But when we're seeing, price action that just consistently goes up and doesn't really take a break, I have a playbook set up where, there's like a 45-degree angle this is going at. And this is usually done because the daily is so strong. And the candle that we're seeing on the daily is a breakout candle. So again, you want to be careful that this is not normal to see on the stock market. This is not something that you want to be able to trade and think you're going to always win. Once in a while, if the daily is really, really clear and you have this breakout, this is likely to happen. But again, it's like such a short pullback. You get barely enough time to even set a proper stop loss. And even if you get stop loss set up right here around 377.50, it's very likely you might get actually stopped out, or if your premiums go down 30 to 50 cents. But again, the 2-minute is in alignment with the daily chart. We have this bounce here right at 370, testing the lows and then immediately exhausting, going towards the upside. And then you have the 380 level here and then the target here around 395. If you're able to hold something like this, that's really, really amazing. I typically don't do it. I might be gaining out right around 378. In fact, this specific stock, the way that it was moving, I was already in a trade at the time. I completely missed it. And I was looking for actually an entry, waiting for a pullback. It did not give me a single entry. So unless I was trading it right off the open, something I typically don't do, this trade was really hard to find an entry in. And even the 380 level, there was so much buying pressure, but it was likely going to pull back. And since it did not, it was just showing further strength that buyers were in control. And then finally some profit taking started to occur. Then more buyers stepped in and then sold off again, and then sort of took a rest for the rest of the day. But the 2-minute chart is where I look for my patterns, look for areas that I'm entering and exiting the trade. But again, this is all coming from the daily chart right here. The daily chart is what I reference right before market open. It's where I do my preps, where I set my levels. And I'm typically not trading any chart that does not look as clean as what you see on Tesla. This is something that's really, really helped me immensely when it comes to trading quality, is if the daily chart is not going to show you some sort of possibility of an expansion candle, there are not clear levels where you think the price is going to move up towards or down towards. Same thing towards the downside. This is all choppy, this is noise, but as soon as you break below the 20 moving average, you're expecting to sell off, and perhaps you can set your targets here around 310, maybe set it around 295. But overall, when you're trading stocks, if you start with the daily, and this is what has helped me, if I have a clean daily chart and it shows areas where there's tradable void, this is what I call void, areas where there's room from where the breakout level would be at like a 360 or 350, and then an area where you can possibly look to take targets, or even that's where you enter if you can get a pullback. If I don't see charts like this, I don't trade them. So between the main watch list that I have of about 9 stocks and a secondary watch list of 9 additional stocks, maybe 2 to 3 of them will be my favorites for the day, and then I'll note them down to make sure that I'm keeping an eye on them, set my levels, set my alerts, make sure that I'm watching them, but not closely watching them, just waiting for them to hit the levels, hit my alerts, and then I can execute. So overall, all the different time frames, they're very similar, but they all start with the daily, and the weekly is a reference to see what the overall trend is. I try to keep my charts clean. I just use candlesticks, volume. The indicators that I use include the moving averages, and then I also have the ATR, which is what I use on the daily. If you found value in this video, let me know in the comments below. Overall, keep your charts clean. Try to look for high probability trades. You don't have to trade every single day or every single hour. You just have to make sure you're looking out for quality, and this will likely improve your win rate. It will likely improve the ease you have in staying and holding your trades that are winners, and cut out the noise. Filter out all the bad trades that you don't need to take. If it's not qualifying as an A+ setup, perhaps it's not best to take, because it's just going to take you longer to start building your account up. Take care.